All right, so what I want to do today, I want to do a lesson that new users need to do. And, sometimes when you're new to the software program, you're like, okay, there's a lot to learn, there's a lot of pieces, and I need to make sure that I've got everything done properly. So the first thing that I want you to do when you're new to our software is think about your goals and objectives. And, again, look, I want you, everything that you want is going to change as time progresses. So if you say you want $200 a day, then that's a nice thing. Or if you want $400 a day, that's a nice thing. And look, if and when you make $400 a day, you're not going to be happy with $400 a day anymore. You're going to say, wow, if I trade more contracts, I can get $800 a day. And then at some point, after making $800 a day for a while, you're going to go, wow, I could make $1,600 a day with the same trades if I just trade twice as many contracts. Again, it's important that initially you have some type of objective. Okay? And what we're going to do today is we're doing a lesson in going back through history and seeing the trade. And again, I want you guys to do this with one objective in your mind. Okay? Somewhere between $300 and $400 a day is what you guys need on one contract. Because if you can make, let's just say 400, which is high, but let's just say $400 a day. If you trade a $5,000 account and you average $400 a day over the course of 20 days, you're going to make $8,000. Is everybody okay with that as far as mathematics go? It's pretty simple. If you make 400 per contract per day after cost, you're going to net out $8,000 a month per every one contract you trade. All right, so again, then, I talk about something that happens a lot. Hang on. You're not going to make any money day trading until you've done the right things, until you know what you're doing. So, one of the things in our trading plan, you're going to use the first 30 days with us. You're going to use the demo time to say, hey, is this thing even worth it? Right? Should I spend more time and money on this thing? And then once you get past the demo time, you're going to use the first 30 days doing what we're going to do today, which is, understanding high probability rules and management for trend trades. Does everybody understand that? You're going to take 30 days to do what we're going to do today, and you're going to go back and you're going to understand where the highest probability trend trades are, and then how to manage those trades. Then, once you understand how to do that, you're going to then spend 90 to 120 days simulating, practicing, without any financial risk, trading on the simulator. All right, so now I want to tell you that profitable trading is a skill. Just because you buy some software doesn't mean you're a great day trader. Same way if you buy some great golf clubs, you're not a great golfer. Or if you buy great paintbrushes and an easel, you're not a great painter. You have good tools, but you need to hone your skills of trading in order to be a better trader. And again, this is the number one thing that most people skip, is they think, I bought software, I should be able to make a lot of money day trading. So everybody tell me yes, you understand that concept. Just because you buy a great tool doesn't make you a great trader. And if you don't know that immediately, you will soon learn that lesson in the real world with punishment that the market will dish out to you. So my objective in this lesson is to try to lessen the amount of punishment that the market is going to dish out to you later. So the sooner you get through this lesson and learn this lesson and apply this lesson properly, the less the market will punish you later for it and may actually even reward you. Now, traders should use at least 3 to 5 times the required capital per contract. So we're going to look at crude oil futures. And again, this is all in the, some traders day trade gold and it's $1,000 a day to day trade gold. Some people day trade crude oil. It's $1,000 per contract to trade. Some people will trade the S&P, which is $500 to day trade one contract. And again, once you understand, that in order to trade one contract, you should have $1,000 in your account. And most people will allocate 3 to 5 times the required amount of capital. So in my example, I've used 5 times the required capital to trade one contract. So you can day trade one crude oil contract for $1,000. The extra $4,000 is there in case you mess up. Everybody okay with that? Now, also, this is where I want you guys to get to. I want you to get to the point where you say, hey, I'm responsible for all of my trades and my analysis. I don't need help. I know what I'm looking at. You've proven through simulation and practice that your trades win and that you are comfortable with your trades and that you follow the rules on every one of your trades and that you understand the nuances of your trades because you've done 1,000 repetitions. Not because you bought software, but because you've gone through and done the work. So today's lesson, what I want to do is go through and do some of the work for you and show you exactly what we're talking about. Now, I have in page 2 a list of videos, right? There's a video introduction to each of the indicators, and then there's a very lengthy video on all of the rules for a trend trade and entering using the market flow and trade management. Then there's a lesson that we did the other day, or I don't know, I guess last month, actually, a month ago or so, that was an additional trigger line reading lesson. And in this lesson, and you can go back and you can watch the lesson itself, but in the lesson, we talked about a very, very simple look that we were going to do, and you can go back and watch this video, but this is what I want to base today's study on. And Ed was the one that really needed this yesterday. So again, look, when people ask me for help, I like to go to the nth degree and make sure that you guys have help. So again, in this video, the very short rules were both triggers were crossed up or down. Our fib to fib oscillator was in the upper 25 or lower 25%, and then we were at support or resistance. And then we had a trend trade. So, that's what we're going to base our lesson on today. Now, there's one more thing that you need in order to really be effective when you're day trading. So there's a couple of things that we're going to talk about today in today's lesson that are going to make you stop doing trend trades. Okay? If you hit a bunch of red or blue Fibonacci lines, you're going to stop doing trend trades until you get a breakout or the market goes the other way. Is everybody okay with that thought process? I'll give you the picture real quick, but it's pretty simple. If you hit a bunch of red lines, you're no longer going long. If you hit a bunch of blue lines, you're no longer going short. Pretty straightforward. Okay, the other thing that we're going to use in this lesson is, and again, I want you to understand, we're going to only look at one simple chart for this lesson. We're not going to look at 3 charts. So we're going to use an adaptation of this rule. We're going to use a 5-1 chart only. And if you have divergence or multiple divergences from fibs, then we're going to stop doing trend trades. Fair enough? So I know the rule technically says if there's divergence on 3 charts, but we're just going to use 1 chart today. So we have to kind of modify the rule for this lesson, which is if you hit red lines and you have multiple divergences, you stopped going long. Pretty straightforward. Just want to make sure we're all on the same page 100%. So let's take a look at what we're going to do today, okay? And again, this is a real simple lesson, and sometimes, think about this. We've been in business for over 21 years doing this, and sometimes we take for granted how much we know and how little somebody who's brand new knows. So I'm trying to go back to somebody, Heather, you're an example. You're brand new, demo day 1. So, this is really geared towards hopefully you grabbing a quick understanding of what we do and how we are going to help you spot opportunities. So, rule number 1. So, we're going to write out some rules real quick, okay? We're going to make them very simple. Rule number 1, both synthetic triggers crossed in our favor. Rule number 2, price touches fibs and or midbands for the area to trade. Number 3, fib to fib oscillator is lower 25% for buys, upper 25% for sells. So our objective is 20 ticks, okay? And think about it. Crude oil is $10 per tick. So if we get 20 ticks, that's going to equal $200 in profit. Everybody okay with that? We're going to risk 10 ticks max, which equals $100. Now, we'll go through and we'll look at the real world, and sometimes there's a lot more money to be had, and sometimes there's not. So we'll see. Okay, now, exit. Okay, so our exits are going to be at a stop, at a profit objective, or with divergence. And now, again, Heather, I don't mean to call your name out so much, but you're brand new. So I love working with brand new people because, you're the ones that need to understand this stuff. So a divergence is going to be represented by a negative number on the chart. And I'll show you thousands of them before we're done with this lesson today, okay? And we're going to stop trading if we hit, price touches red lines or blue lines, which is our Fibonacci. Okay? Everybody okay with that? So we'll stop trading if we have red lines or blue lines at Fibonacci areas. Now, I did want to throw in one exception for our trend trades. The exception is if we stop trading due to multiple Fibonacci and or multiple divergences at Fibonacci, we can do one trend trade with a single trigger crossed in our favor. So basically all I'm saying here is what? If an area stops us All right, so this is pretty simple. Hopefully this is pretty simple. And you'll see when we go through it, this is going to be, and again, look, in the rules, in our trading plan, on the website, in the videos, everything else, this is everything that we do right here, all written out for you. We're going to trade when everything is going our way really strong, when we pull back to areas to trade from. Our objective is to make 200 bucks if we're lucky, right? We don't want to lose more than $100 if we're unlucky. Okay, pretty straightforward. Now, we're only going to get out if we get stopped out, we get to a profit objective, or we have divergence, which will be represented by a white negative number on the chart. And we're going to stop trading if we hit a whole bunch of Fibonacci lines. And we're going to go the other way if one of our synthetic triggers, not both of them, crosses the other way from one of these multiple Fibonacci areas. So is everybody okay with the rules? I mean, this literally is your entire life, everything that we teach you, everything that we want you to know, everything that you need to know in order to make money consistently with Nexgen software, period. There's a lot of other things that we can do, and there's a lot of other opportunities that you can take, but this is all you need to know in order to make money with Nexgen. Now we're going to go through and we're going to do some historical review, okay? So what I did is I right-clicked on my 5-1 chart, which is basically what sets up our trend trades for us. And we're going to go into data series, which I've done already. And you can do this with the 11 or any contract that you're on. It doesn't matter. But I have continuous contract data for replay. So Nexgen Dynamic Renko 5-1 chart. Look what I did. I set it back 150 days. And it's not because I really need to do 150 days worth, but I want to go back and, again, there's no cherry picking allowed. There's no BS allowed. There's no lying, cheating, stealing, waffling. There's no ambiguity. The only way you're going to truly make any money is if you can truly do what needs to be done, which is spot the right trade, execute the right trade, manage the right trade. And again, that's what it says in our trading plan. Check it out on the last page. Let me just go through this last page real quick so we can be 100% clear. And you guys are going to love this lesson. Do not risk any real money while you're learning. The internet is littered with losers who say they've lost money trading, but they never really knew how to trade. I mean, 90% of people, they say, or maybe even 90% of people that don't know what they're doing lose money. So, it's like picking a fight with Conor McGregor or Mike Tyson back in the day or anything. You don't want to do it. You're going out in the market trying to take somebody else's money from them. That's basically what trading is about, right? You don't go trade your car in for less than it's worth because you'll lose money, right? So the same way with trading in commodities. You don't go trade your commodities in for less than they're worth or you're going to lose money. Does that make sense? So if you don't actually know how to make money, there's probably very, very little chance you're going to make any. Just because you bought software doesn't entitle you to take other people's money from them. If it did, everybody'd be a winner because everybody's paid $100,000 for software in their life, right? You've bought 5,000 books, you've done 22 seminars, you've lost $250,000 to the market, and yet you're still not making money. Why is that? It's because you have not obtained the proper skills necessary to take other people's money from them. You hear what I'm saying? If you do not participate in class, you're not going to magically obtain any skills. Just like I watch baseball all weekend and football all weekend and golf, and guess what? I'm not better at playing golf, baseball, or football, I promise you. I may be worse because I ate chicken wings and skins and drank cold beer all weekend. So I probably lost some skills over the weekend. So you will not obtain skills for being a day trader to take other people's money unless you practice. And that's what we're going to do today. We're going to practice. You have to have the right trade recognition. You have to know which trade is going to probably win and which one's going to lose. If you don't, then you're going to be in trouble. You have to also know how to get into your trade at the right spot and with the right look and with the right execution. And if you don't know those things and you do them wrong, you're going to mess up. You also have to know how you're going to get out of your trade. Period. If you don't say, uh-oh, I need to get out, and you don't know what you're doing, you're probably not going to do real well. Once you know all these things, then you have to prove it by practicing. If you start simulating and trading but you don't know any of the rules or what you're supposed to do, what are you practicing? People go, well, I started simulating on day one and I'm not winning. I'm like, well, what rules are you trading? And they go, I don't know. I'm just simulating just to see what happens. That doesn't work, guys. You have to know the rules, know how to execute, know how to exit, and then you start simulating and practicing. And then you do 1,000 practice trades, and guess what? Finally, you know what you're doing, and then only then will you have an opportunity to make some money. So, and again, I'm not trying to scare you. I'm just trying to take a long-winded approach on telling you what's necessary in order for you to actually make money, not wish you made money or pretend you made money. Or, in Mark Douglas's book, if you guys have ever read this, Trading in the Zone, I put a little piece in here. There's a big difference between predicting something might happen and thinking about all the money you could have made and the reality of actually getting in and getting out of trades. There's a psychological gap. And that's what makes trading difficult for most people. The gap can only be closed through practice and execution of a plan that is very rigid, very little ambiguity, but also flexible enough to account for the truly unique and dynamic nature of the markets. I wrote that sentence technically. So anyway, I took some of his ideas on I put a sentence in there. Anyway, short version is you have to know where to get in, you have to know where to get out. So what I did in this lesson is I went back 150 days just kind of randomly. And now we've got our rules, right? So we're going to start trading. Fair enough? And we're going to go back and we're not going to trade technically. We're going to do what you guys need to do in the beginning to understand what the trade setups are and where they are. So our rules, and look, anytime you guys get confused and you need to go back and review the rules, here, let me do this. I'll copy paste them in, so if you want to put them on your own Word document, you can do that. Let me do this. I will also take a picture of these things. So again, Nexgen software has the ability to do a lot of really cool things. Counter trend trading, picking off the tops and bottoms and all breakouts and all kinds of other things you can do. But unless you're making money first, don't be a hero doing any of these trades at the top. Just worry about the trend trades. So again, if you have questions about the rules, feel free to please ask me. But this, to me, is rule number one, which is stop going long if you hit a bunch of red lines. Agree? As long as you guys agree, we're going to keep moving forward. Now, with there being a whole bunch of red lines, we're going to stop going long. And, and again, we're picking this up from June 4th. I mean, this is a long time ago, but you'll see that after we go through 1,000 repetitions of this, you're going to see it. So our rules are both triggers are down and we pull back to our fibs and our midband. This is the area where you should go short, somewhere in here. Can you guys see it? The rules are met. The trigger lines, these two triggers are down. The fib to fib oscillator is in the upper 25%. And that's a spot where we should take a trend trade short. So give me a little why in the room you understand and you can see it. So again, we're going to go a little slower in the beginning and then we're going to ramp up and go faster as we go. Stop doing longs. You hit a bunch of red lines. Okay? All of our Fibonacci red lines. Stop doing longs. Fibs break. All the triggers are going down. You're going to do a short trade and you're going to go to the downside. Now, our objective, I want you to just, again, we're going to go slow in the beginning and then we'll pick up some speed here as we go. But look, if you just got in somewhere, let's just say 65.73, okay, for a round number. Somewhere in that 65.73 area. You only need to get to 53, which would be right here, and that's plus $200 per contract. And again, you have to ask yourself the question, was there enough with the rules that we have and what the market actually did to make $200? And the answer is going to be yes, right? I mean, I think it's pretty easy to see that you could have very easily made $200. Technically, it went on to make about $400 before it ever turned. Now, our other rules are, look, as long as the small triggers stay below, we're going to do another trade, right? So we're going to go short one more time. And divergence, that's this little thing right here, is going to stop our trade from going short. So again, I want to go slow at first, and then we'll pick up some speed here. So look, both synthetic triggers cross in our favor. Pull back to fibs or mid bands. We're going to do some sells. We're trying to make 20 ticks. We're going to stop if we have divergence, which is this negative number on the chart. So you see this negative number right here? Again, we're going to go slow in the beginning and then we'll pick up some speed. With those negative numbers, you're going to stop doing trend trade shorts. And the reason why is because when you get a bunch of these negative numbers, you know, the market can stop sometimes and start to go back the other way. So again, look, does everybody understand and see the trade setup? I just want to make sure before we move on. There's a trend trade short here. Easily made 200. There's a trend trade short here. Didn't quite make 200. And then that's it for now. All right. So, and again, look, this is June 4th. So we're going to kind of pick up some speed here and kind of go forward. Okay. Again, you know, you guys can do this really slow on replay and that's fine. But, you know, again, look, here's the key element for us. Right, so we get to some fibs, and, you know, this is the first time both of our trigger lines are crossed up. Right, so you're wondering, all right, should I buy the green midband in our blue Fibonacci area? If you do, you probably get taken out of it right away. Now, this is where, since we hit red lines here, look, this is where it becomes easier for us to do that same trade. After we have the red lines turn blue and all of the triggers going up in the midband, in the fib. Would you guys agree that's a spot where our trade is true? So over here, we'll call that one iffy. You know, there's a little more technique to it because when the triggers are past the fib, technically we can do one more. But for now, this is your next trend trade long. And it doesn't follow through, does it? You know, again, if you got in at the yellow box, you never even came close to getting stopped out. So the yellow box was what? 65, 79, somewhere in this neighborhood you're getting long, give or take. And we went up about $150 worth, but we didn't get our 20 ticks. You shouldn't have lost any money, but you didn't get your 20 ticks. Fair? Now, you can see what happened. We had a bunch of these pink lines and lots of divergences, and then eventually the trend goes back down. So we're only looking for one thing, guys. We're looking for the spot where, and again, I'm going to go a little bit faster. We're looking for the spot where we have mid-bands and fibs that we don't come off of our triggers. And again, this is not the spot. So we have nothing, 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 nothing. And then look, one trade right here. All the triggers are down. The background is red. This is the only place where everything comes together for us. Fibs, mid-bands, and both triggers going down. Can you see it? Triggers down, fibs down, mid-band down, fib to fib oscillator in the right spot. And again, Siva pointed out probably the best, or the part that I kind of smoothed over, which was we had a trade over here at, we'll just call it 9:30. So you had to sit and wait and wait and wait and wait and wait until about 11 o'clock. So again, I mean, that's a good point right there. You had to wait 1.5 hours before the next high probability trade. This is where most people lose patience. This is where most people lose the ability to follow their plan. Because they say, well, John, the market moved a lot. Why didn't we have a trade in here? Why not? And that's because the rules weren't met for high probability trade. And again, you know, you can go back and study the rules, but we need both triggers to be correct. We need price, touch, and fibs and or mid bands to be correct. We need the fib to fib oscillator to be correct. And we can't have fibs or all these divergences in our way. So again, this, you know, it's a 4-letter word, wait. Probably the hardest part of trading is waiting, isn't it? Because you think you're missing something. You think, oh my God, I'm missing all that money, and you're not. Your rules aren't met. And when you think of it in those terms, then you will start making money. Watch what happens. So I'm going to get you back to your trade. And again, look, somewhere around 65 price-wise is where your trade happens. Can you make 20 ticks or $200? And the answer is yes, you can. And then look what happens. If you were to take another one, you would be trading into blue fib support, which would be ended by divergence. That's the end. All right. And again, look, guys, there's a lot of waiting involved with trading. And again, if we have divergence, that's going to stop a trend trade cold, right? So if we're going short here, divergence stops us. Divergence stops us again. And you guys know, you'll see through the rules that you get one more chance at a pivot stop out if the trend is still down. And again, this is your second opportunity. You know, you may have to do 3 trades here. You may have to do 1 trade here and make 200, 1 trade here and make 10 and break even, and then 1 trade here and make 200, or 10 and 20, depending on how you handle your business. Now, we go up, right? The problem with going up here is that where did we stop? Would you agree we stopped at a bunch of Fibonacci resistance? Trader AG, your question was why 200? Well, we've been doing this now for 21 years. The average move in crude oil is $200 to $300 for day trading on what we're doing. So 75% of the time, you can get out at the blue line, but I think you're missing the point. Let me spread this out for you. If you were in at 65, let's just say, where would your $200 be? It would be at 80. So that's 2 ticks past the blue line. If you took $180 on it instead of 200, I'm still okay with it. Right? So again, a lot of people instantly lose sight of their goals and objectives. Right? People lose sight of their goals and objectives so fast that it's actually incredible. Your goal and objective is to make $400 a day, which is 40 ticks, right? So if you were trading this one day so far, you would have made 20 ticks here, 10 ticks here, 10 ticks here, 20 ticks here, 10 ticks here, 20 ticks here. You've already made your $400 goal by 11 o'clock in the morning. We're going to keep going because that's what we do, but you've already made your goal. Just these 2 little trades right here made your goal of $400. So everything else after that's bonus. You don't have to keep going, but many traders do many more than 2 $200 trades in a day. Right? Now, we never had a long trade. Right? So it's more stop looking for longs than stop longs. And you can see, does everybody agree? Look, you hit a bunch of red lines, no more long trades. That was the rule, right? So the rule was also if you hit a bunch of red lines and eventually one of your trigger lines crosses over, which didn't really happen in a good spot, but if one trigger line crosses over, which is right here, you can do one trade. So again, it's the cause and effect. The cause was the red fibs stopped your long trade. Which is the very first stop taking longs in your trading plan. Now, some people take, if the red fibs say stop taking longs, then they're going to try to take a short. And when the triggers roll over and you pull back to your mid band, usually you get that first short trade. Not exactly with the rules, so we're not even going to count that towards the profit. We're just studying, okay? Now, agree down here, we got the same thing. We have fibs plus divergence. So again, we have to know when to stop, right? So blue fibs plus divergence, stop shorts. Agreed? So we stop going long up here. One short trade maybe in the middle, and then no more short trades after this. Everybody agree? And again, we're only on, this is a one trigger line trend trade. One trigger crossed after red fibs hold. It's a conditional trend trade. If the red fibs hold and then the trend changes eventually, you get one short. Everybody agree? That's what we said in our exception. If we stop trading due to multiple fibs and or divergence, we can do one trend trade with a single trigger cross in our favor. Does everybody understand this? Very, very, very important. If the red fibs stop your long trades, and then eventually the triggers roll over, even if you have one, you can do one trigger crossed trade. Give me a little Y in the room, you understand me. I want to make sure that's clear. Now, blue fibs stopped our shorts. Guess what happens? The opposite. One trigger crossed after blue fibs hold. So you get the opportunity to do one long trade after the blue fibs stop the market. You see it? Then the market continues up. And again, we want fibs and mid bands as our area, right? So here's our area, and again, they might overrun just a little bit, but look, you don't know that they're going to go just a smidge further right here, do you? You're going to say to yourself, hey, look, blue fibs and mid bands and everything else, and everything's going up, so, look, granted, this is overnight, so I guess we can skip trades that happen at midnight. So again, look, just to review our first day, we're going to pick up speed on this now, guys. Just to review our first day, we're only looking at one chart, Don. So no long after the red fibs hold, after the red fibs break, we can take a long trade. Then we had to wait an hour and a half until all of our rules came together again. And then eventually we had all of our triggers and our fibs and our mid band and nothing in the way, and we made more money. And then we had the opportunity for maybe 2 more short attempts that made money. And then the market reversed, but it stopped at the red fibs, so we're not going to go long. And even if you did, you probably could have made a little money, but we're not going to do it. And then because of our condition that if the red fibs stop the market, first trigger line rolls over, we take a short. Same condition in reverse. Blue fibs stop the market, first trigger to roll over and turn green, we can take a long trade. Don Green, it doesn't matter. If you have any bunch of blue fibs that stop the market, that's the end of the party. Doesn't matter where they came from or why they're there. All that matters is the area and the trigger lines themselves. And this is why I'm showing you on one chart, because it's less confusing. If the blue fibs stop it, whatever blue fib it is, who cares what chart it came from? If it stops the market and the market turns green, the background turns green, you're going to go one the other way. Don Green, thank you for your question again. The rules are both synthetic triggers must be crossed in our favor on the 5-1 chart. The rules say the price must touch fibs and or mid bands for the trend trade. The fib to fib oscillator needs to be in the right spot, and we will stop trading if we touch a bunch of red lines or blue lines. And if those red lines or blue lines make the market go the other way, we don't need 2 triggers crossed in our favor. We could use 1. So just to review the rules for you real quick. All right, so let's go forward. Again, this is a spot where probably you ended up with one long trade. And again, the background turned red, so if you didn't, that's okay. And here we go again. Multiple divergences with pivot stop outs. It kills the market, guys. And it's not that you can't go long, it's just you're going to lose more often than you're going to win. So again, if you went long, divergence would have ended your trade. But because we have all of these divergences, and then we start going down again, guess what happens? When one trigger line rolls with a change, you maybe get an opportunity. You're trading into a bunch of fibs, probably not high probability. When both triggers are crossed down, now you have a high probability that you're going to get a trend trade. You guys see the difference? One trigger line crossed down, it does go. And if you're coming from a major area, that's fine. But when both of them are crossed down, now you have an easy winner. And again, the idea, guys, is 20 ticks equals $200. Can you make more? Sure. Can you do this on a bigger chart and take bigger trades? Sure. You've got to get the look down first. That's the only way you're going to be a winner. You got to get the look down first, and then you have to practice the look. So as we move forward, would you guys agree? Mid bands, fibs, and all the triggers are down. Some type of short trade. Can you see it? And again, it's obvious for me because, and again, look, when we get into a nuclear strong, very, 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 very strong market and we break fibs and we break divergences, we don't worry about them as much anymore. All right, the market goes down. Could you have made 20 ticks? Sure. Could you maybe make 10 and then break even and then wonder why you didn't make the rest in the beginning? Probably so. That's okay. So look what happens. The trend changes. We didn't quite hit fibs, but the trend changed. So again, if we would have came from a little more fibs here, we would have said to ourselves, one trigger line crossed. And you guys will start to see this pattern as we go through and get to about 400 of them. One trigger line crossed, no divergence, one trend trade long. Two trigger lines cross, and again, we had divergence, so this would be the spot you're looking for. And again, divergence ends it. We don't get follow through on that second trade, but that's okay. All right, so what happens? One trigger line rolls over. Can you take a short trade or not? You see what I'm talking about? You could, but it didn't go all the way. We want both to be crossed in our favor. When both triggers and fibs and mid bands, and I spent a lot of time with this with Ed yesterday, can you do a trend trade? Could you have done a trend trade short here? Sure. Divergence ended it. Right? If you have a one trigger trend trade, you got to be a little more careful with your exit. If you say too many fibs here, I'm not going to do that one, you'll still live. It's okay. You'll just wait for the next one. Do you guys see it? Mid bands, fibs, two triggers up. And again, if you said, hey, I'm not going to do it because we came from a fib, then that's okay too. Right? There will be more. Fibs, both triggers up. And again, as you start to see the strong trending market, you'll see we break the resistance, fibs and triggers, and divergence ends it, and then you do it again. Watch, we'll just keep going forward. All of your triggers are up, and here's your fib and mid-band area. And again, you probably didn't get stopped out, but it didn't follow through. You had divergence. So if you have divergence and it doesn't follow through, then what happens? The triggers roll down, you change the trend, and again, look, you're probably going to do a trend trade in here, somewhere in this fib and mid band area. And, with both triggers down, you're going to end up losing money. That's okay. You're going to take some losers, guys. The conditions are right. You break the fibs, you turn everything over, you go short. Sometimes they get you. All right, now look, one trigger down, one trigger up. All right, Don Green, problem solved. Don't worry about the little triggers. There's not 3 triggers on the chart. The rules say, and I'll go back to them again, both synthetic triggers crossed in our favor. Doesn't say anything about the small triggers. So I'll just eliminate them from the chart, and then there'll be no more confusion. All right. So one's crossed up, one's crossed down. We wait. And would you agree this is where we would do a trade? Both triggers are up. We have a mid band and a fib, and we're looking for 20 ticks. Yes or no? You guys tell me, guys. Yes or no? You wait. I'm not saying you can't trade back and forth between these areas, but that's not the most advantageous. Could you have made money buying the mid-band and fibs? Could you make $200? Yeah, you could. Would you agree that we ran into a bunch of red lines with divergence up here at the top, red fibs and divergence, and that's what usually will end our trend for us, or at least lower our chances of using the mid-band and fib again. So mid-bands and fibs with no divergence, and you trade from support up to resistance, and you make a bunch of money. You get to red fibs and divergence, and you're like, okay, we'll see what happens, and we'll see what happens, and we'll see what happens. And again, look how many times they hit that same spot. And again, could you have maybe taken one more trend trade after you got mid-bands and fibs, or mid-bands and fibs? Sure, you could. But you're trading into resistance, and it makes it difficult. It's like banging your head on the wall and banging your head on the wall. All right. Now, remember what we said to ourselves? If red fibs and divergence cause the trend to change and the triggers to roll, can we do one short? Yeah, we can do one short. The rules weren't technically met until we got to here, and that was after fibs and divergence really ruined it. This is the opposite of what happened up here at the top. That was fibs and divergence at the top ruined the party and made the market go down, and the same thing down here. Fibs and divergence over here ruined the party and made it go back up. Always the same party ruining effect when you have fibs and divergence. And now this is midnight and overnight, but we'll even look at the overnight. So this is where all the red lines break. Agreed? No more red lines causing us heartache. No more, I guess technically we had one long trade right here, but no more red lines causing us heartache. And what happens? We go up to fibs and divergence from fib support. Is it a coincidence? Maybe, maybe not. Stay tuned. We'll find out. Does everybody see the fibs and divergence up here at the top? There's a negative 69 right here. That means stop going long. You're going to lose. Now, some of our more experienced traders that have 10 or 15 years of experience, or 17 or 18 or 20 years of experience, they're going to use this stop going long as an opportunity to try to go the other way and go short and make the money going up and then make the money going down. You're not there yet. Walk before you run before you sprint. Before you ever make it to the Olympics, you got to learn how to run. Okay? So all you need to know is when you get to fibs and divergence, you're going to stop. No more long trades because you'll probably lose. Okay? Now, unfortunately, they're going to make it difficult. You're in the middle of fibs and divergence down here too. Agreed? So the same thing that made the market go down is making the market go up. One trigger has turned. And really, look, what we're looking for is for something to break. Let me revert back to the trading plan for 2 seconds. You're going to love this. In our trading plan, it's very simple. There's a couple of key areas, and this is when you're going to stop doing 5-1 trend trades, and you're going to wait for a reversal in the market, or you're going to wait for that area to break. Easy enough? So again, this is a good example. Fibs and divergence means stop going long. Right? For counter trend traders, it means go short, but we're not doing that today. Okay, so for now, it's stop going long. Okay? Fibs and divergence also means stop going short if you were going short, which we weren't. And now, when is this fibs and divergence going to be over, guys? When the fibs change color. That's it. That's as easy as it gets. When the fibs change color, we're going down again. Can you see it? It's the same. Look to the left over here. Fibs change color. That means we go higher. How's this? When the fibs change color, it means that we normally go to the next fib. So we go from it was resistance, and we wait, fibs change color, and then we go to the next red line. Is that easy? I think it's pretty easy. And then at fibs and divergence, we stop going long, and we wait, and then eventually when we get fibs and divergence, we stop and we wait, and when the fibs change color, guess what happens? We go to the next fib. This is where the breakout traders trade. Now again, we're not doing breakout trades either, are we? So you can see just from trend trade review that there's a lot of other opportunities. There's counter trend trade opportunities. There's breakout opportunities. We're only talking about trend trades. And the ability for one single simple trend trade with simple rules with one chart can make you $400 a day. All right, we're moving forward, guys. Fibs and divergence causing trouble. Sometimes when the market's really strong and breaking through things, we'll take one more. But again, for now, we'll just leave it as fibs and divergence, no trend trade short, okay? Sometimes when the things are too strong, you got to take one more anyway, but you'll get used to that. Now, when fibs and divergence break and the colors change, maybe we'll take one more opportunity for a short trade, especially in a strong trending market. So again, when you start to recognize strong trending markets, you'll see where some trades are. But fibs and divergence, they break, which I think is pretty easy to see. And then, again, you have to pull back to Fib to Fib oscillator in the upper 25%, which is going to keep you from getting in too early, and it's going to put you in at this spot over here somewhere. And you're waiting for some type of entry signal, which we're not even worried about entry signals yet. We're more worried about just seeing the right trade. Now, eventually we get down to, lo and behold, fibs and divergence. So what does that mean? Stop going short, right? And lo and behold, what happens? We change the trend. Now, they make it very difficult for us on this one single chart. I mean, obviously, if you're using two charts, you have more information, but on this one chart, all you have is fibs and divergence. Don't go short. Agreed? Some people will say if that happened from major areas on 4 or 5 time frames, then we'll go long, but we're not doing that. We're just not going short. Because look what happens to any other short trades. They lose. Now, can you go long? It's very difficult because once again, you're stuck in a position of having to wait for an hour. I bet you can see one long opportunity in there, can't you? With one trigger rolling over from fibs and divergence. I'm not going to give it to you because why? Because you have to trade into resistance. So it makes it difficult, but it still works anyway. Now, when fibs and divergence break, guess what happens? You finally get one trade that, you get an opportunity to go long. So the fibs break, they turn blue. That's the sign that it's time to keep going long, right? And it looks like this was crude oil day. So everybody knows at 10:30 on crude oil day, the party's over for at least 5 minutes, right? Because when we get to Wednesdays on crude oil news day, this is what happens. It goes berserk. Look, all of this price data right here is in less than 1 minute. You guys see that? So again, here's 2 minutes out, and then finally at about 3, this is 3 minutes, all that happened. This is where we want to stay out of the market during crude oil news. Agreed? And if you haven't seen it yet, every Wednesday you're going to see it. It goes berserk. We don't want to trade when it's going to go berserk in 1 minute or 2 seconds. So after a few minutes and things start to mellow out a little bit again, we start to get back on our trading plan. Okay? And again, a few minutes into it, here, I'm going to steal so I don't have to type it in again. All right, so look, as we progress out of the first few minutes after news, do you see the trade set up? So as we get to 10:33, a few minutes after news, do you see the trade set up? 2 triggers down, mid bands and fibs, trend trade short. When we get to fibs and divergence, that's the end of the trade. Can you guys see it? 2 triggers down, mid bands and fibs. We broke through the blue lines. We're going to go one more short. Fibs and divergence ends the party for us. And could you have taken another short? Of course you could. But for now, we're going to be conservative. We're going to wait for the blue lines to break. And when the blue lines break, what happens, guys? We're going to go lower. Can you see it? Now, granted, this one didn't quite get back to the mid-band, so, we might have missed that one. But you can see the thought process, right? Blue lines, fibs, and divergence break, and lo and behold, the market goes down. Now, it makes a really strong, fast run back up. And again, we get to, some red fibs over here, not fibs and divergence, but red fibs, which means we're not going to do the one trend trade long here. It does win, but you never know that when you have the fibs like that, multiple fibs. Now we have one trigger up, one trigger down. We're waiting until, darn it, right? You do all that waiting for 30 minutes and then it's fibs and divergence on you again. And you're like, oh man, I see the long trade, but I can't do it because of fibs and divergence. Agreed? So, you just got maybe one trade in, maybe two in an hour and a half, and you just have to wait and wait and wait and wait and wait. And so fibs and divergence, and again, it breaks, but then it unbreaks. And now finally, fibs and divergence, even though they went just a little higher, but then they broke and then unbroke really quickly. And then finally, look, we go to the downside, we break through. Do we get one trend trade short when fibs and divergence holds and changes the trend? Yes. Now, did it follow through? No. So again, you're in here thinking you're going to get rich going short, and divergence kills your trade. And you're like, dang it, I'm going to try it again. And then divergence kills your trade. And then now, look what happens. So you're like, okay, I'm just going to be patient, and I'm going to wait. And then look what happens. It breaks out. All the triggers are up. Mid bands and fibs. You're thinking you're going long, right? Without even looking at what's coming next, because I have absolutely no clue, this should be somewhere in this neighborhood. We should see a long trade. Agreed? It's your trading money, guys. What do you want to do? Are both triggers up? Do we have fibs? Do we have mid bands? Is it right? If you did it, you took a loser. That's okay. It happens. Sometimes you're going to get the most perfect trade on the planet, and you're going to lose. I'm okay with that. If you take this look right here as the trade 1,000 out of 1,000 times, probably 750 of them win and 250 of them lose. Right? And to lose is okay. Now, as you're going down, you can see the one trigger trend trade, right? One trigger trend trade because they're not both crossed and you broke below every fib. Changing every blue line into red lines is also something that's very important, right? I mean, it really shows that this is what they call a fake out, right? They break out, but then they reverse really quick, and you're like, oh man, I got tricked. And again, it's a little bit volatile, but one trend trade down, and then it quickly reverses. One up, one down. And you get faced with the same situation again going into the end of the day. Fibs and divergence, but there's your trade, right? And now you get to the edge of fibs and divergence. And then your party's over. Again, what I'm trying to do, and again, we've only gone through 2 days. So I've got 130 more days to do. You guys hear what I'm saying to you? We're going to do two triggers and fibs and mid bands and edges of fibs and divergences, and I'm going to go through 150 days, and you're going to be like, wow, okay, I got it. So until you get it, how's this? I can use this one. Edge of fibs and or divergence. Agreed? Bunch of blue lines. Bunch of red lines. You see, it's just a mess. Sometimes they get a little bit choppy. And, look, sometimes when they get choppy in between two areas, that's okay. This is where our counter trend traders really thrive. Do you get from the edge of fibs one trigger line trend trade short? Yeah, you do, but again, we're looking for two. When do the edge of fibs and divergence break? And when can we take a high probability trade? I mean, this one had one mid band, but that was it, and then divergence killed it. So, not very exciting, is it? And then I'll just keep using this. Agree? Edge of fibs down here. The edge of fibs holds, and again, look, my counter trend traders are going long here, but for you, you're waiting for two triggers and everything to be perfect. So this is your finally, after all that waiting at 9:40 in the morning, you wake up and there's your first trade. Can we agree? We're not at the edge of fibs. All the triggers are up. The mid band and one-to-ones right there. And then you get to the edge of fibs and divergence again. And you wait for it to break and change colors. And what's going to happen after it changes colors, guys? We're going to take a shot in a long trade. Now, they didn't make this easy, right? We have a long trade, and then we have pivot stop outs and long trades, and we have the edge of fibs and divergence for things going up. And they didn't make it easy, but it went up. Fibs and divergence, once again. Can you go one trend trade short with the edge of fibs and divergence with one trigger line rolling? Yes, you can. And can you do it twice? Probably so. Will it become easier? Again, I think you can even use the edge of... Look at the difference over here, guys. Just look at your charts. Edges of fibs with divergence for longs with everything green and going up. Edges of fibs and divergences with the charts red. And the market goes down with the trend. Now, edges of fibs with divergence ends your shorts, right? We'll break out of here eventually. Jeez Louise. Again, this is a lot of waiting, right? Could you have had one trade in here? Yes, but it's a one trigger trade, so we're trying to do ultra high probabilities here. You can see the temptation of some edges of fibs and divergences for changing the market trend, can't you? All right. I know it's a pain in the butt, but the edges of fibs and divergence ends the trend, and again, there's maybe one, not even a trade in here if we missed it. So you got nothing, just the edges, the fibs, and divergence. You're waiting again. There are a couple days where you can just literally sit here for hours and it just doesn't do anything. But look what you're in. You're sitting there waiting, but look, you're not missing anything. You need to make 400 bucks. So, when everything is finally going up, can you make any money? Both triggers are up. The red fib turns blue. Long trade, maybe yes. I know it's tough to wait. That's probably the thing that gets most traders more than anything else, is waiting. Okay, the edges of fibs and divergence. Can you see it? And again, you never know it's going to hold. So it's not your job to try to decide whether the edge of fibs and divergence is going to hold. If it holds and the background color turns red, then we can start looking for trend trades. And again, if we get to the edge of fibs and it holds, again, we don't do anything. Again, there's some not quite fitting the rules trades in here, right? Where we don't quite get everything we're looking for. And I hate to show you this, but I guess it's a good thing to show it to you. If you had two trend trade longs, and again, there's some out of bounds opportunities for going short over here, but we're not doing out of bounds trades. We're just going simple, simple, simple. And you have to ask yourself the question, are you going to be able to sit there through 3 hours of the market and not do a trade if it doesn't fit your rules? The edge of fibs and divergence, and look what happens. The market changes trend. If you tried to buy a pullback into here, there's no good areas for it, so it's not really anything there. You get a little pivot stop out, it's still not very good. You can see the appeal of the edges of fibs and divergence for my counter trend traders, can't you? And again, maybe, like we said in our plan, if you get the edges of fibs and divergence and it changes the trend, you can take one shot at going the other way. Edges of fibs, again, look, the triggers are up. We're really waiting for everything to cross back up. Would you agree that this is the first spot, finally, after all that suffering and waiting and just the horrificness of having to sit there and do nothing for a couple hours, you finally get your trade? Agreed? I mean, that's really just suffering, having to sit there and watch everybody else make all that money. But finally, the whole world came together for you. Finally. Could you have made money? Two triggers up, blue fibs, green mid bands. After all the fibs change colors. I think so. Now, I mean, look, we missed by a tick. I mean, fibs, double divergences, and the market goes the other way. Shocked? Probably not. And again, you can see why it's tempting for new users to say, okay, I'm not going to just do trend trades. I'm going to do trend trades and fibs and double divergences and pivot stop outs at the edges. You can kind of see the allure, right? Now, we're not doing that in this lesson. We're doing trend trades. So we're missing, half of the trades from the edges, but that's okay. Fibs, divergence, and the edge, you see it? And again, this is probably your trend trade down, and unfortunately, you don't get rich on this one because you get divergence. Divergence kills a trend trade. Edges of fibs again, guys. You can see what happens at the edge of the fibs. And again, only one of two things happens at the edge of the fibs. The market reverses or it breaks out. I mean, that seems pretty logical, right? And we have some really, really, really high probability looks for knowing when it's going to break out with our trigger lines. And when our trigger lines don't say it's going to break out, which, again, you guys watch the fib and trigger line reading videos. But short version is if none of the triggers break the edges of the fibs, usually it goes the other way. So we go through, we're going to go down, we're going to go down, we're going down, we break the edge of fibs, and I would say you would do a trend trade in here somewhere that you would lose. I would almost bet $100 on it. This is everything finally coming together, guys. And you're like, yay, everything came together. And I'm going to go short right there. And, especially when you see a tail like that, that's usually indicative of you're going to have a trade in there that's going to lose. You see it? It's the perfect look that just doesn't stop. And almost every time you have the perfect look that doesn't stop, and again, I've got a picture for this. I've got pictures for everything, but again, we're doing trend trade study, guys. I want you to study the trend trades and study the trend trades and study the trend trades and study, the more you see trend trades and keep everything in the trend trade realm, it's going to make your life a whole lot easier. Whenever you get a trend trade that traditionally doesn't work, like here's a picture of one from June 29th, as a matter of fact. This is typically what happens. You get the breakout, you get the perfect trend trade look, and I think you guys, with our rules, you would agree that's a trend trade long in this area, right? And I had the market flow on, and that's where it gave an entry, and it just lost. But it was a great look. And almost always when you have the perfect trade that doesn't win, you're going to get what I like to call the apology trade. So this is what it'll look like in the real world. The perfect trade that should win usually will apologize to you and give you twice as much going the other way as what you lost. You guys see that? So again, you'll get used to this, but this is a perfect look right here that should have won. I mean, we should have gone short. And what you'll see is that the apology trade actually got you all your money back. Anyway, we'll save that for another class. All right, as we progress forward, guys, can we agree that everything's going up here? So we're looking for trend trade longs. And we get to the edge of fibs. We get to the edge of fibs. We finally break the edge of fibs. And again, remember what I was telling you guys about the strength of the trigger lines? Usually when the trigger lines are past the fibs, we break the edge of fibs, but, which would enable you as you gain more experience to go long here. But forget that one. After the edge of fibs breaks, this is your one long trade. See it? Right. And again, if you're in from around 74, can you make 20 ticks? The answer is yes. And then you get the edge of fibs again. And then you get the edge of fibs again, and then it breaks. And after it breaks, it goes up. Again, this is a little bit of a squirrely couple of days here because there's not a lot of trend trades. The edge of fibs, a little overrun, and you can see the trend changes back to down. So this is a spot where you want to go short, but then you get divergence. And you're like, oh, man. And again, sometimes with that divergence, we get a second chance. And you guys will know this. And then we're waiting, waiting, waiting. And again, look at it. It's a one trigger down, and you just don't get any follow through. One trigger's up, one trigger's down, so maybe one shot at it. Everything breaks. And it's the same thing over and over. You see how we're studying this look? Fibs with divergence. No more long trades. John K., you posted in a chart earlier this morning and you said, why did I lose my trade? I thought it was good. And if you repost it in again, we can look at it. But you'll see that you went long after fibs and divergence. And that's why you lost. All right, so all the triggers down, we're going short, right? Short from here, maybe short from fibs, and then can you make money? The answer is yes. Now we get to fibs, and we get to fibs with divergence, and lo and behold, the trend changes. So John K., this is what you posted in this morning. Which was your long trade. So look at your long trade here. So this is the one we were talking about. You went long after double divergence from a fib, which means it's going to go lower. You see that? So these are the types of things that we do in class, which is, again, we talk about conditions that will make your long trade not work. So you see, just using that same logic. And then you said, hey, all right, forget about all that, conditions that ruin my long trades. I'll use that same condition to go short, and then you made a bunch of money. So you see the difference in just, again, this is why I ask you guys to post in your trades. Had you have gone short over here instead of long, you would have made money instead of lost money. Then maybe one attempt at a short, but it's short-lived because one of the triggers is up. And then using the edge of fibs and divergence to go short again. Again, this is how we do this in the real world, which is to take these rules and take the things that we teach you. And again, whether it's gold or Bitcoin or Apple or Euro US dollar Forex, or it doesn't matter. All the markets are the same when the bar structures are the same. And again, we wait for everything to be going up, such as this, and then we find a long trade. And again, guys, look, perfect trend trades are not always available. There's, again, the edge of fibs with divergence. I think we can all agree that the edge of fibs is a pretty cool place to be, right? And, again, I'm not saying that you can't do counter trend trades, but not in the beginning. When everything is going your way and everything is up and you have fibs and mid bands that come together, you get easy trades. And you only need one or two easy trades a day to make the bills. You just need one. Siva, here you go. I had posted in a link to the rules just so everybody could have it. Just it's the same rules we use now. I didn't make anything new up here. The only thing I'm doing in this lesson is going back and reviewing the charts and pointing out what is obvious to everybody who's had software for a long time, but the long trades that are obvious to winners, right, who've had software for a long time. And then the edge of fibs with divergence and the subsequent first attempt at a short trade. Can you see it? Edge of fibs with divergence, trend changes, one shot. Both triggers going down, so the edge of fibs, and again, divergence ruins it for us. So we have to wait again. Right, but I think if you did these trades alone, look, so at 1020 you went long and you got out somewhere up here at resistance. You could have made a couple $100. Agreed? And then after the edge of fibs and resistance hold, if you went if you went long here, short here, and then one more short over here, I think between 10:30 and 2 o'clock, you could have made a couple $100. Yes or no? What's your opinion? Based on the rules, the fibs, the triggers, and the chart, could you have made a couple $100? Again, you don't always have to make 400 a day. If you make 200 a day, you're still winning. The idea is to put you into situations that are going to win more than they lose. And again, you'll start to see as we work our way, again, let me work our way into past midnight here. So here's midnight. Can you see the long trade? It should just pop out off the chart at you when you start to see the right trade. Can you see the two triggers, mid bands, and fibs long trade? What do you guys think? When it's obvious, it's obvious. And you shouldn't take a trade unless it's obvious. That's the secret to winning. All right, I'll go forward. Fibs, divergence, nothing's lining up. The edge of fibs, so no shorts. The edge of fibs breaks. One attempt at a short, which is ruined by divergence, which sometimes if we get a little pivot stop out, we can still take one more shot at it, which doesn't follow through. Is that fair with what we know, guys? We break fibs, we're going to take a shot at a short. If we get divergence, we may take a second shot at the short. If it doesn't break through the triggers, we're done. Now we wait for something else to line up. So we go forward and nice little breakout there. Looks like crude news again. 10:30. Remember that 10:30 crude news we'd say we stay out of? Look, that's 10:30 and this is still 10:30. And it's still 10:30. You see all this? These are all electronic trading algorithms that you shouldn't be messing with. So look at all that at 10:30. It went up $600 and now it's going down. And then at 10:35, give or take, right? So at least a few minutes after. So all that was 3 minutes. Do I rest my case on why we stay out of this mess during news? Because really bad things can happen to your money in 1 minute or less. That's a really good visual, isn't it? Again, know when your reports are. And look, once we get 4 or 5 minutes past it, then we can start talking about, if we have any types of opportunities for trades. And you can see there's a couple of trend trades, but again, they don't go very far. And again, you have to say, in all fairness, we're going to try a short trade here that divergence kills. So, divergence kills it. Same thing, one trigger up, one trigger down. The first place where we have fibs, mid bands, and all the triggers going up. And we think we're going to get rich, right? Because we think we're going to the fibs. Unfortunately, divergence ends the party, right? Same thing in reverse. One trigger down, one shot at a short, fibs and divergence, so it ends the party. Again, it's kind of, look, these types of markets, granted this is overnight, but these types of markets are great for the counter trend traders because they're like, look, the edge of fibs and triggers are supposed to hold because, one trigger's up, one trigger's down, and they're sideways. So they'll buy down here, sell up here, buy down here, sell up here, sell up here. They'll make a killing. Trend traders are having a hard time looking for something that's going to work. So we'll move forward to, look, this is 5 o'clock the next day. And we'll wait for everything to line up to where everything is totally good. We have no fibs and or triggers. Triggers down, triggers down, triggers down. Can you see it or not, guys? Give me a yes or a no. Can you see where everything finally goes your way? 2 triggers are down. I know it takes a long time for that to come together, but again, fib to fib oscillator at 75. That's the only time it was at 75. 2 triggers are down, mid bands and fibs. It's the one time you get one easy trend trade going down. It's the only time. There's a lot of waiting. I think that's probably the biggest lesson in here. And again, could you have held on for all of that? Depends on your trading plan. That happened in 30 minutes. From there down to the support. Now, if support breaks, what are we going to do, guys? If all the triggers are going down and you have 15 blue lines of support, which would have been your target, if it all breaks, what do we do, guys? Would this have been another sell signal for us? I kind of blew it up really big, but this is like a super exaggerated version of breaking a big fib. I mean, that's as big of a break as you can possibly get on the planet. And again, look where it goes. So let's look at the strength and trend of the market. Obviously, a very strong trending market. So you get a short here, you get divergence, and then you get one more short here. I mean, that's like as textbook perfect as you can get. That's literally a no-brainer, isn't it? You just go short right there and you just hang on for dear life and hope things work out. Agreed? And we don't get that. We just went through 3 or 4 days of chop. And you'll get that sometimes where 2 or 3 days it's like just a grind and you're like, oh, it's not quite right. Oh, it's not quite right. Oh, it's not quite right. And you got to wait and you got to wait and you got to wait. But if you don't blow out your trading account in those 1 or 2 days or 3 days, then you really start making opportunities happen again when things start moving. Now, Agreed, edge of fibs and divergence, no more shorts. Pretty easy, right? If it all breaks and we pull back to mid bands and fibs, guess what? More shorts. And lo and behold, if you did more shorts, could you have made a couple $100? I think the answer is yes. So there's two takeaways here. The edge of fibs with divergence, you must stop doing trend trades. Agreed? If the edge of fibs with divergence breaks, you can continue to do trend trades. If the edge of fibs with divergence breaks, you can continue to do trend trades. I mean, this is a day where look what they gave you. After 2 or 3 days of chop, you get a trade where you get 1 super short, 2 super shorts, 3 super shorts, 4 super shorts. All of a sudden, after a couple of choppy days, they let loose, didn't they? And now you're up $1,000 a contract that day, helping the averages on those choppy days a little bit. Not that you couldn't have made money on the choppy days, but again, 1 more short, maybe 1 more with divergence, pivot, stop out, and then they don't make it through the triggers. Which means what? Means they might go the other way. And lo and behold, the trigger lines change, and we're not going short, long. Most of our experienced traders are going to go long one time, but we're not doing it because of the edge of fibs and divergence, right? We're just not doing it. We'll wait for the fibs to break if they're going to break. And you'll wait and you'll wait and you'll wait and you'll wait, and then they break, and then you're like, mother scratcher, they tricked me. Right? And they tricked you without an apology trade. They tricked you to go long, and then they fooled you, and then they went short. And rolling forward, this is overnight, 1,800 hours, so we're not really trading 1,800 hours, but you can see they apologized and obviously went down quite a bit. Let's get back to 3 o'clock. 2 or 3 o'clock's when London opens, and you get fibs with divergence, so you're waiting, and then the fibs turn blue. What does that mean, guys? It means you're going to get one. You're going to get one that's going to be okay because the fibs turn blue. We're only on June 18th. We have all the way until October to go, guys. Can you imagine if you actually went through and did 4 months worth of analysis on trend trades, and if fibs broke, what happened next? Again, we did all these during, the real world. So these are not a surprise to us. We already, we've seen these live, we've taught these live, we've talked our way through all these things. And again, look, you don't know, and then now you know. We're going up. And again, it wasn't pretty, but support holds and get you up to resistance. They didn't make it easy, did they? But it worked. Now we got to resistance, and we get to the edge of resistance with divergence. Some people love that look. I love it for not going long anymore. Some people do love it for going short. Just throwing it out there. I think you guys can see, right? Can I show you one of our trading plan rules from this is the year 2004, 2005. If you hit fibs with divergence, which is now represented by a negative number, look what our trading plan rule was. Get in after the trigger lines roll over. Do you think that from what you have just seen over the last hour and 40 minutes, do you think that if you get to the edge of fibs and the trigger lines roll over with divergence, you have an opportunity to go the other way? What do you guys think? Now, I don't want you starting out doing counter trend trades, but we've seen this trade for the last 14 years straight. That's the reason why we say at least, if nothing else, stop going long. Right? You see it? Now, there are some who would use that as a short signal. The edge of fibs with support. Stop going short. If you were short, you would stop going short. What happened after that? The edge of fibs with divergence. Do you see it? I'm not saying do counter trend trades, but for sure, if you were going long, you'd stop going long. This is the power of the Fibonacci, guys. The edge of fibs. The edge of fibs. I mean, the counter trend traders are making a killing on a day like that, aren't they? They're going short, and then they're going long, and then they're going short. You know, if you get 2 or 3 of those, I mean, look at the difference. You know, there's 30 ticks, so it's $300, $300, $300. That's $900 a contract. John T is one of my counter trend and trend traders. He'll take all the counters and all the trend trades. But he's had software for going on 18 years. So again, walk before you run and do the high probability ones first. Wait until everything's going your way and it's nice and easy. And you break through all of your resistance. And again, look at your triggers. Pretty easy to see you're going to break through, right? Then divergence from resistance. The dreaded, see, here it is. When you're a trend trader, it's the dreaded divergence from resistance. John K., the picture you shared earlier when you said, why did I lose this trade? And I said, this is why you lost the trade. Double divergence, pivot stop out from resistance, and when you go long, you lost that trade. And when you look at it from this perspective, here's the same thing, but this is back in June. Double divergence, pivot stop out from a fib. If you go long here, it doesn't win. It bounces a little bit, but it just doesn't win. Again, this is why it's imperative that you guys post in your charts so we can see what you're doing. All right, so in all fairness, we're going short here. Agreed? Fibs, mid bands, all the triggers are going down. Give me a short trade. Unfortunately, divergence ends it. Sometimes we take a second chance at it. And look at that. Eventually it breaks down and we get another chance at it. Could you have made a little money, and a lot of money here? Granted, that's late at night, so let's move on. Again, guys, you can do this for hours and hours. I went back 150 days. All the fibs break, everything's red, find some spot to go short, make a few ticks. Within a tick or two of fibs and divergence, stop going short. Edge of fibs, stop going long. You can see the potential for some counter trend trades, right? What do you guys think? You know, again, give me some perspective when you guys look at this. What thoughts go through your head as new users or users of our software? What do you guys see as the main takeaways from this lesson on what we're doing? Hopefully the first one is patience. Waiting for everything to line up and getting the opportunities, because look, this stuff in the middle that doesn't quite match up, it just doesn't work. When everything breaks and everything's good and everything comes together, you get a better chance. Sometimes divergence kills it. And then you wait and you wait and you wait and you wait, and again, eventually everything comes together. Divergence killed it. What's the big takeaways here, guys? Again, you guys can do this with your chart. Just set your 5-1 chart 150 days back. Everything going down, and you can start to speed up the process. Divergence with fibs and divergence with fibs. And then finally, look, high probability long trade. Everything going up, nice and easy, nothing in the way. 20 ticks up to resistance, and guess what? Divergence at resistance. I know it's a shocker, but it was the top. Here's your one trigger trend trade short after the top. You lost. That's okay. It happens. Look, I'll show you guys losers 9 ways to Sunday. I don't care. I don't shy away from losers because losers happen. Knowing what trades to take and when to take them and why. Look, counter trend trade short, trend trade long. Difficult. Everything going up, everything breaking out, not so difficult. Not so difficult. Not so difficult. Long, long, long. Uh-oh. About to get difficult. Can you see it? And again, I'm speeding up now, so breaking above, long trade. Resistance with divergence. It's about to get difficult. Uh-oh, we broke down to the downside. Shocker. Man, you probably took a short trade here that you lost. I'd almost bet $1,000 that you would take a short trade right here you lost. I wouldn't even bet $1,000. I bet $100,000. Right there, you take a short trade with a pivot stop out thinking you're going to win. And, we're doing this without the benefit of all of our arsenal, right? So, again, just to keep perspective, we do use the other charts to help us, to know if maybe we hit something over here that said stop. But for the most part, we're just using one chart. So double divergence. Do you remember what I said about the apology trade? If you have a perfect one, you should win. Usually they pay you back. See the apology trade? I promised you an apology trade. That's an apology. All right. That's a breakout of all of your fibs, and things are about to be easy. And again, look, it takes a while. If you go long and you get divergence, sometimes you got to do it twice. Things are about to get difficult. We hit fibs with resistance. That's it. That's the end of the party. You need to know when the party's going to pick back up again. When all the fibs break, you get another chance. Or another chance. Divergence keeps running you out of it. And then the party changes, right? One big push to the downside, one chance at a short, and if it works, great, and if not, you would get out with divergence. Did it work? Divergence at support. Lo and behold, it was a low. All right, guys. So look, we've gone on for 2 hours here with the lesson. Again, if divergence with support is there, stop going with the trend until that area breaks. I know you're already thinking about counter trend trading at those types of areas, but again, keep it in the trend trade realm first with your midband, with your fibs, with the triggers, with nothing hurting your trade. And then as you start making some real money, all right, so again, just to kind of bring it all back together into our trading plan here for you for just a second. Use the first 30 days to study our trend trades. Go back over months and months. Go back over 12 months worth of these trades. I don't care. However many it takes for you to feel comfortable with what you're looking at. Use this time to start recognizing high probability winning trades that will generate a profit. Then simulate and practice those trades in the real world for the next 90 to 120 days. And only after you know you can do it for sure and you know when to go and you know when to stop are you going to have a chance to make real money. And you're going to end up at this spot right here. You're going to be responsible for your analysis and your trades. You don't need any help. You know what you're looking at. You know when to stop. You know when to go. You have proven through practice, simulation, and historical chart studying, you know which trades win and which ones lose and why. And because you've done so many of them, you will be comfortable with those trades. And because you've done so many of them, you understand all the little nuances of each trade setup. Like, what's the strength of the market? If it's super, 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 super strong, maybe I don't get out with divergence. Maybe I just stay in and ride it out. Or maybe the market's a little bit choppy. No trend trades, maybe I should do trades from the tops and the bottoms. Just, those little things like that. But only through thousands of repetitions are you going to understand and, get the experience that you need. So, again, there's 3 ways to get experience. Number 1, go back and study your charts and find all the trades. Just go back and where are my trades? Why would they be there? Where's my fibs? Where's my divergences? Where's my trigger lines? And then number 2, you can use market replay to go back and replay the day and trade it and practice it and see it happen live and unfold live. And then finally, you're going to get the opportunity to get to like today's action. So again, I don't have a live chart here. Let's pull up a live chart, if you guys don't mind, just real quick. And let's use those same rules and let's see what happened today, okay? So I'm going to build a 5-1 chart. And we won't even go into, any of the other charts here. And let's just see how our rules played out on today's data. Even though we were looking at June just to kind of do some random history, but let's see how they played out today. So give this half a second to load up here, and then we'll get down to business. And again, we're going to go back to the beginning of the day today, wherever that might be. Okay, and look, here's midnight. It's the pink line right there. So there's midnight. And after midnight, what do you guys see? I mean, you already see it. It's so obvious once you start to see it. Divergence from the edge of resistance. Agreed? Divergence from the edge of Fibonacci, and what happened? What happened? Long trades won't work anymore, number one. If you did short trades up there, they would work for sure. And the market went down just a few ticks from the edge of fibs. And then look, we broke through fibs. Would this have been your first trend trade short? Granted, you were probably sleeping, but those of you in London and Europe and Italy, that's your first trend trade short, agreed? If you're up early, this was your first counter, but this is your first trend trade short. Does everybody see it? Do you agree? Both triggers down, the fibs are red, sell, get out at support with divergence and fibs. It was an easy $200. Yes? All right, we broke through further. And again, no easy trend trades here. I mean, there was a trend trade, but we're not doing it because of divergence. So what do we see? Lots of divergences. We go back up, and the thing turns green. Still no easy trades. Divergence, and we go lower. And then at 6 a.m., divergence from the edge of fib support. So we're not going short right there. Agreed? Agreed? Give me a little why in the room if you agree. Divergence from fibs at support. We're not going short. Had you have gone long there, you might have made a little money. You can almost see again, when you back this out and you're like, okay, divergence from the edges of fibs up at the top. Hang on a second. Oops, sorry, I hit the wrong button. I really messed that up. Bear with me. Again, divergence from the edges of fibs. I'm not trying to invoke you to be a counter trend trader, but that's half of the trades that we do are counter trend trades. There's only two types of trades we do, guys. We've always said the exact same thing. This is what's in the plan. You can trade with the trend with everything going your way, or you can trade against the trend at the edges with fibs with the market flow. All right, so edges of fibs, had you have gone long with the trigger lines rolling up, guess what would have happened? You would have made money. And edges of fibs with divergence. No more longs, right? For the moment. Now, finally, what do you guys think? Everything came together inside of this spot, right? We broke that silly edge of fibs. The fibs turn blue, the triggers are going up, and could you have made 20 ticks up to resistance? Yes, is the answer. You don't even have to type it in, I know. And then we broke through fibs again. This is the edge of fibs, and we broke through, and this is where you would have been going long. And again, they're making it difficult because of these divergences. And it just doesn't follow through. That's okay. They didn't make it easy. Everything is going down. You have divergence, divergence, divergence. If you try to short trade here, which I'm not against, divergence ruined it, just like we've seen 100,000 times, right? Which is okay. And divergence from the edge of fibs and the triggers going down miraculously was the top. And after the top, there was one little push down, and then now we get to the bottom. Divergence and fibs, and the trigger lines roll up. Isn't that our trade from 2004, 2005? Divergence at fibs and the trigger lines roll. I mean, you've seen this like for 14 years straight. So you should be able to see divergence at fibs and the trigger lines rolling. Hopefully you see it. I see it. I see it in my dreams at night. Now, we broke through and all of our trigger lines are up. Guess what, guys? We're now live. Should you be looking for a long trade live right now? I know it's noon, but this is the look, right? We've been waiting for this forever. You break above. This is your long look, and you're going up to resistance to make a bunch of money. Watch. We'll watch it live just to finish off our little lesson here. So somewhere between, I mean, you got to narrow it down to a two-tick window. 76 and 74 probably is your spot. So let's say you went long at 80. You only have to make it up to 72 and you get 20 ticks. So this is live as we speak. Same rules we just talked about. Did you guys go long? And if you did go long, where did you go long? Just out of curiosity. I like to see what you guys are up to. If you did it, if you didn't do it, it's cool. Or if you're waiting for 74 or who did what? 76, 77. All right, guys. So I think we've had a great lesson. And again, look, you guys, my charts might be a little different than yours because I've got 150 days back on my chart. Oh no, I got 30 days back. But look, right click on your chart, format your days to load. I mean, it's going to take quite some time to run if you change it to 150 days back, but load 150 days, go study fibs and divergence at the edges, and then go study perfect trend trades. And there's absolutely no way, if you do that for a week straight, you're not going to feel more comfortable. So again, I appreciate you guys sticking around for the lesson. If you're watching this and you haven't signed up for a demo, sign up for a demo. We'll get you one. Put your real name in there. Put your real phone number in there. Put your real email in there. This is real deal. You're not going to get software and all the education if we don't talk to you. So put your real deal in there. And look, bottom line, you only need, think about it, you only need 20 ticks twice a day to make $400. From the edges with divergence, with the perfect trend trades, there's almost no way that you don't have that opportunity every day. And then, instead of making $8,000 a month on one contract, as you start to ramp up and, if you have the ability to end up at 10 contracts and you can make 400 a day, the rewards are ridiculous. So first things first, we have to work on consistency. We have to work on these things that you guys need to do. Number one, don't trade with real money. Number two, work on your trade recognition. Number three, work on your entry execution. And then number four, how do you exit the trade? That's where you make or lose the money. Do it on simulator, just like we say. Post your trades in the class so we can see why you did what you did and, what did you do right? So we can go through the picks. What'd you do right? What'd you do wrong? And you can see, John K., I'm not picking on you. I know you know. But after this lesson, you can see how extremely obviously wrong this trade was. And that's really what we want you guys to get to, is to the point where you don't need my help. You know what's right and you know what's wrong. And again, if you don't participate in class, you don't have that easy opportunity. So again, look, here's how it worked out. Just like we taught you in the class, pretty straightforward, pretty simple. Everything broke above resistance. The trigger lines are all going up. We pull back to the fibs in the mid band. You go long somewhere around here, and you get out somewhere around here. That's live as we speak. So again, you can see we're not making this up, guys. Cole, I appreciate your charts. Looks like you've got something else on here, but again, same thing. You've got an extra indicator all over your charts doing something, but same thought process. Long from fibs with the triggers going up, get out at resistance. Nice job, Cole. All right, guys. You guys enjoy your afternoon. I really appreciate everybody's time. I appreciate you guys sticking through my lesson. And I look forward to seeing some posts in the room of your guys' trades and your participation in class so you can start making some money. Have a great day, and we'll see everybody later.